Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report. Today's a very exciting day for us because at the end of the report we're going to announce the winner of the Trading University Scholarship, and that's worth about $3,500. We're going to do that today. Right after the show, we'll announce the winner's name. I've got a big bag next to me here with all the names in there, and we'll pull that momentarily. Let's get to the report, though. Before we do get to the charts, I need to point out that Forex trading involves substantial risk of loss and is not suitable for every investor. The charts we're going to be looking at are real-time market snapshots and may not be replicated going forward. First market, the Australian US dollar, Aussie USD, it looked to be breaking out on Friday. However, you pulled back slightly today. You have a bit of a shooting star there, a bit of an indecision. Market closed a little bit lower than where it opened yesterday. In between then, you put a bit of a tail on that market. So higher prices were rejected. It takes three candles to close. It takes three closes above a historic level like that for us to call that a breakout. Let's put that line on there for you. You only had one close. You couldn't get the second one. Very similar to what we saw back in December and January, where you got one close above this previous high there, but you couldn't get that second one, and you had a correction. So we'll see what's going on now. Short-term trend on the daily definitely higher. Short-term trend on the weekly higher. Short-term trend on the monthly higher. So market this pair is still higher on all time frames. It's just pausing above. You're not, again, kind of true to nature now at this point. Again, you're not seeing follow through on the higher high. So we'll have to monitor that. On the other hand, you haven't really had a 4-hour shift yet either. So short-term trend still hanging on higher on the 240, definitely higher on the weekly, daily, weekly, monthly. So we'll have to keep an eye on that. Next market, the Euro US dollar. Euro US dollar, some indecision here. You haven't really had any follow-through on the downside similar to what you had in the pound, and I'm not sure what that is telling us here. Short-term trend down on the daily. However, you saw last Friday we shifted the short-term trend to lower on the daily. So you're down on the daily, but you're still up on the weekly. So I guess what that's telling us is we'll take it at face value. It's very obviously you're in a counter-trending market. Price is still below the monthly directional line on top here also. So your counter-trend between the monthly and the weekly, and your counter-trend between the daily and the weekly also. So counter-trending market, generally indecisive market, choppy market. You're not going to necessarily see follow-through generally in a counter-trending market, and that's where you're at here in the euro right now. Here's the pound US dollar. Pound dollar. Here's a completely different animal. You're down on the daily, down on the weekly. You saw higher prices were rejected. Here's another case where the November high was a critical level for the pound. You closed above it once, couldn't close above it again. You had a sharp correction. Here again, well, it looks like you closed above it twice, couldn't get that third close. Big change direction candle last week, and you're seeing a big correction. And now this is more than just a correction. You're in the vicinity of a 2-month low here. So it looks like you're making at least a new 1.5-month low here. That'll be worth watching. You're actually in a position to shift the intermediate term trend down here. Daily's down, arguably weekly's down also. You're below this long-term trend line right there. So that's pretty significant. The pound is definitely one to watch on the downside for the pound. Let's go back to check in on dollar CAD. I've been saying 95 even for a long time. You had a pretty sharp retracement, pretty sharp short covering rally here off the horrible events in Japan, the tragedy over there. The market's starting to return to normal, though. 97 even, the figure is going to be an area to watch. I think overall, though, with the bearish price pattern in place, the lower highs and the lower lows, that you're still going to see that downside target at 95 even. Next market's going to be dollar Swiss. Dollar Swiss is still the flight to quality market. Money continues to go into the Swissy. overall, anytime there's trouble, it's going to go into the Swissy. Now, you had a big, pretty good dollar rally on Friday, and not that big of a surprise because we pointed that out last Thursday that you actually had your short-term trend was higher on both the daily and the 240. That's significant. What I say, when your short-term trend is higher on the dollar and 240, that's going to put your day traders in a position to where a trade on a 15-minute or lower is actually going to be a trend trade. Keep that in mind. If the daily and 240 are higher, short-term trend on those that daily and 240 are higher, then that makes a buy signal on a 15 a trend trade. So that opened the door last Friday for your day traders, your shorter-term traders, to play the upside because they know the power of sticking with the trend. Overall, this is going to be one to watch. I've been saying for a long time, I thought you were in the middle of putting in a big rounded bottom. It became much more than that when you had that spike on the Japanese situation. You had a flight to quality into the Swissy. However, I think time-wise, you're close to a potential bottom in this market. I've been saying that for a long time. And we'll just have to see. Currently, the daily trend is higher now also. Let me take a peek at the 240. Trend on the 240 is down here. So you're in a counter trend market. The daily's up, but the weekly's down. Counter trend on the lower time frames too, because the daily's up, but the 240's down now also. So that's going to be a tricky market to play. Probably one to avoid. If you had a 4-hour shift back higher in line with the daily, that would be attractive, I would think. Hey, let's go to dollar yen. Dollar yen, it's going higher grudgingly. You did shift the daily trend higher on Friday. You had some follow through here, and this is a good situation where if your daily and your 240 are higher, let me plug in my 240. When the 240 is all the way down there still, when the daily and the 240 are higher, that means the intraday trades, if you're trading the lower intraday time frames, that going long would be a trend trade. So that you have to consider that important dynamic in trading. If your daily and 240 are higher, what's the trend? The long-term trend on the intraday, they're going to be higher also. So that makes buy signals trend trades. And generally, professional traders are going to steer more towards the trend trades than not. Professional directional traders, that is, discretionary traders. So important to know the daily's higher here. Overall, you're in a counter trend mode here. However, that 240 is in line with the daily. To me, that favors that more in favor of what's happening now. What's happening now is higher prices. Meaning what's happening now, the current direction of the market can at times usurp the long-term direction of the market. And generally, when you're 240 and daily are in that position, that's what we would look for. Hey, let's look at the U.S. stock market. I'm pretty excited about picking the winner of the contest, but we got two more markets we're going to cover here. The U.S. stock market, you had a pretty good sell-off off of Chicago Fed President Evans' remarks. Evans said today, should seem to be conflict with what Plosser said last week. Evans said today that he's more concerned with employment than inflation. He's not that concerned with inflation. He thinks it makes sense to play out the last of the quantitative easing, and he's in favor of keeping a more easy policy, at least for now, which would seem to be at odds with what Plosser said last week about opening the door to the end of the quantitative easing. So mixed signals from the Fed. It actually had a negative effect on the U.S. stock market. Stock market got drilled pretty good today. However, you're seeing, the daily had shifted last week, but you can see that the trend is still up here. The weekly trend is up. Daily may be down, but the weekly's up. The monthly's up. You certainly have a pretty favorable price pattern over here overall for the U.S. stock market. So stocks are holding their own despite getting drilled pretty good today. Hey, let's look at the dollar index, and then we're going to announce the winner of the Trading University Scholarship for this month. Today we're giving out a scholarship. We'll be giving out two more scholarships. The second one will be, I'll have to look it up, I think the 26th of April, and then the third one will be in May, and that will be timed to the release of our new book, Mastering Trade Selection and Trade Management, from our good friends, our partners at McGraw-Hill. Okay, here's your dollar index. A little bit of a slowdown here. I guess that's to be normal. You're still counter-trend between the daily and the weekly. The daily's higher. What's interesting is this is occurring just above historic support there, just above 75, the figure. So that's going to be interesting. Hey, let's take a look at the 240 and see where you're at there. Oh, big turnaround on the 240 here. So now you're not only your counter-trend between the daily and the weekly, but your counter-trend between the daily being up and the 240 being down there. So, that means you're probably going to have not the keenest, not the best markets to be trading in, because you're going to not necessarily have follow through either way. We like to see the trends all aligned, and we like to trade in that same direction. But you can see not necessarily the case in a lot of these markets, so you're counter trend. But hey, that's very good. Hey, thank you very much for attending the report. Again, my name is Jay Norris, and now it's time. It is time for the contest. You got to shake up the bag one more time there. Pull the winner out. Okay, and the winner of the contest of the scholarship is, I hope I can pronounce this, Agata K from Toronto, Ontario. Agata, congratulations. We'll definitely be getting in touch with you via email. We'll probably give you a phone call if we have your phone number, and that's Agata from Toronto, Ontario. Agata's last name is Kowalszyn. I don't want to mispronounce your name, Agata, but Agata of Toronto, Ontario, congratulations. You are the winner of the scholarship, and we're going to take your congratulations. You're a winner, and anyone else who's entered the scholarship, you're still eligible for the next two. So, hey, thank you very much, Agata. We'll be getting in touch with you. I look forward to meeting you. You're going to be working closely with us now as far as attending the live classes and taking care of you. And, it's definitely in our best interest that we make this worth your while. Hey, thank you very much, everyone. Thank you, everyone, for entering the contest. Good luck with the scholarships that we're going to give out over the next couple of months, and even after that, I imagine we'll be giving out some books, and we'll be doing some other things for you. So, hey, thank you very much. Congratulations, Agata, and we'll be back with the Daily Show tomorrow. Thank you.